In today's video, we're going to be discussing FEPI, F-E-P-I, which is the new Shares Covered Call ETF based on FANG stocks, and it should have a monster dividend. But before we buy this fund, I think there are 5 things you should be aware of. So we earn over $100,000 per year in dividends at this channel, and our performance and value shows that we're still beating all of the indexes. We're up 32% for the year, 31.5%, and the Nasdaq's up 29%. So we're beating the Nasdaq, and the S&P's up 12% as well. So we're beating all of the indexes on a year-to-date basis, and on a daily basis, we're down 1% or about $7,000. But that's to be expected when you look above and see that the indexes are also down about 0.94%, and the S&P's down 0.89%. So we're in line with the indexes, which is really encouraging when you're using margin, which at this channel, you know that I use a portion of margin. So for every $1 you put in your account, you get $4 of purchasing power. I just use a fraction of this margin to get ahead. Okay, so let's go ahead and get into this video. 70% of Americans are living paycheck to paycheck, and that's a shame. Here at the channel, Unconventional Wealth Ideas, we're trying to break that stigma and live financially free out of our brokerage accounts using the power of dividends. So email me for my e-guides at akintodd48@gmail.com if you want to live financially free out of your brokerage account. We're here traveling the world, me and my family. There's TJ here. And again, you can do this too. So I hope you enjoy the video. Sorry about the sound quality. I left my microphone back at home, but the numbers should speak for themselves. So stay tuned, enjoy. Okay, as I was saying, here are 5 things you need to be aware of when owning FEPI. So the first thing that came across my radar is the maintenance. The maintenance is 50%, and as you know, I use the margin to get ahead at this channel. Now look quickly at my day's gain. So now we're down only 0.8, and you look above at the indexes, now we're beating the indexes, okay? So that's due to Cornerstone, and we'll get into that in 1 second because we're gonna talk about how to offset FEPI's covered call issues in 1 second. So I just want you to note that when you're using margin, okay, you need to be aware of the maintenance. And FEPI is 50% maintenance. Now, it was 30 the first day, but I was waiting to see what happened on the second day it traded. And sure enough, it's 50% maintenance, okay? So if you need help understanding maintenance, that's in my margin e-guide, okay? So 50%, that means that if I put 100,000 in FEPI, then 50,000 of my equity is taken up. So this is a big problem when you're trying to travel the world and live financially free out of your brokerage account. I mean, even if you're not trying to spend out of your account, you want your available withdrawal to always be high because you need to be able to withstand margin calls if you're using margin. So if you're not using margin, you need to have this available withdrawal to be high at all times so that you can take from your account and spend freely out of your account, simply put. I mean, even if you don't use margin, once again, people like to spend out of their brokerage account, but if you have high maintenance, like a bunch of 50% names or 100% maintenance names, then you can't even spend out of your account, and that inhibits your ability to live freely out of it. So that's the first thing that came across my radar is FEPI has 50% maintenance, okay? And you know, that's just huge when you're trying to, once again, live freely out of your account. The other thing you need to know about FEPI is that it rebalances monthly, and they sell slightly out of the money calls for both dividends and some price appreciation. Now, they said they sell slightly out of the money. So if you go to their prospectus here, you'll see that here on their website, they give you some information about FEPI. And they show here that they write covered calls, but they don't really explain how far out of the money they're going to be selling those calls at. So that's going to vary depending on the month, I would imagine. But they said slightly out of the money. So that means that you're probably going to have some upside capped, some significant upside capped. And FANG stocks are big movers. So I'm not sure if FEPI, F-E-P-I, I'm not sure if that's the best way to play FANG, okay? I think it's a good income vehicle, though, just like Cornerstone and Defiance ETFs and Yieldmax ETFs. They're not really made for price appreciation, which everyone thinks is, you know, all that matters. They think making money and getting rich has to be linear. But honestly, if you take a 20% dividend like with Cornerstone and you go 5 years, that's 100% payback, okay? So you don't need to have, you can have losses all you want, okay? I get this question all the time about Cornerstone. You're down in losses, so how are you outperforming the market? Because the dividends come in and they pay back your cost position. Again, if you just hold them long enough, you cash flow. Okay. And I've resold Cornerstone and rebought many times, okay, because of the rights offerings. I've been through 3 rights offerings. So this is never going to be the true performance shown in Cornerstone, but you can just look at my account over the last year or two and you see that it's almost double just because of Cornerstone. So the same is going to go for FEPI, all right? FEPI, it's probably going to have its upside capped once again, so you're not going to get those gains. So you probably want to complement it with something like a FANG, which is the FANG triple leveraged ETF based on FANG stocks that has no dividend. So that's why I only have 10,000 in it. But it moves big. So you get, it's like having 30,000 single FANG stocks, but it's a triple FANG. So I've made videos about FANG in the past. Beware of FANG and its leverage, and always keep small amounts in that. But that's how I'm offsetting the upside lost from FEPI, is through FANG. Okay. The other thing you need to be aware of is that AMD is at the top of the weightings for FEPI, and I don't know if that's a good thing or a bad thing. I mean, if you think AMD deserves to be at the top, okay, sure, fine. But you will find in the prospectus for FEPI that they want to have all the stocks at an equal weighting. Okay. So that should be ironed out in the coming months. Also, they use flex style options. So if they get called away, they can renegotiate those strike prices. All right. So that could work out favorably for us if we hold FEPI, because maybe the upside will be participated on with, so because they could negotiate those strike prices. So not enough information to tell how far away they're going to get called at, because they didn't tell us on their prospectus, but they just said slightly out of the money. So be aware of that. Now, I've told you pretty much everything you need to know. Okay. They sell slightly out of the money calls for both dividends and some price appreciation, and they're equal weighted. And they have flex style options, so they can renegotiate that. Now, the other thing that I think you need to just be aware of is, once again, how to get more growth out of it through combining it with FANG. But you also need to be aware of the fact that the maintenance is so high, you can't put all your money in. If you put all your money in FEPI, your available withdrawal is going to drop, and you're really not going to make much in the form of price appreciation. So when the market's on a tear, you're going to be missing out. You're going to have FOMO, and you're going to be really pissed off that the market's up 3% and you're only up, 1%. So you want to have a combination of dividends and capital gains. So we can lose on the capital gain side, or we can win on the capital gain side. But as long as we go with the indexes, we're fine. And when you use leverage like I use, we have about 200,000 in leverage, as you can see down here below. I'm doing everything from my phone, so apologize for the sound or the fast movement. Okay. I'm not about to bring my computer all the way out here to Europe and do the editing here and have to deal with security at every airport I go to. So this 190,000 in dividend in margin debt will be paid back in less than 2 years, because it'll be paid down. It'll be gone in less than 2 years, because I earn over 100,000 per year in dividends. And then my account will be plus let's say 190,000 in 2 years. So my account will be at about, let's say 600,000 in 2 years, and my debt will be gone. And I'll be left with all these dividend paying assets to myself, paying you monthly cash flow for life, which qualifies to banks for loans. Trading does not give you ability to get loans, only dividends. So that was the big aha in my life when I had my son TJ. I wanted to get a house. They wouldn't take UPRO gains or TQQ gains. They would only take dividends or pay stubs. So I have to go with a combination of dividends and growth. Okay, so you want to combine a FEPI with FANG, and then if you want to put the majority of your money into something, I would always say Cornerstone, because Defiance funds, I really like them. They've been working well lately. JEPI and QQQY have really nice dividends, and they've been outperforming the market lately. However, they're also 50% maintenance, but they're indexed, so that's why I have them as a higher amount up here, whereas the Yieldmax names are mostly 50% maintenance, but they're stock-based, so you want to have smaller amounts in those. That's why I have them at 1,000 in the columns here. So if you just go through my portfolio, you see here FBY, Aptly, NFLY, they're all smaller, okay? I have them in $2,000, $1,000 positions. So that's how I'm managing my risk while living in margin, okay? Because you want to always manage your fluctuations. You want to perform in line with the market, even on a down day. So on a down day today, as you can see, again, we're only down 0.73, whereas the indexes are down 0.79 and 0.76. If we go in and check a chart of the indexes, you'll find that the S&P 500 had a nice move off the 200-day moving average, which we've been calling. We've been pounding the table on saying this is the bottom. And I've been buying more Cornerstone as a result, because Cornerstone is 30% maintenance. So that's how I really get to live freely out of my account. But look, we had that bounce off the 200-day moving average, and now we're just up against resistance of that blue line. The blue line is the 50, I believe. Yes, the blue line is the 50. So this is perfectly normal. They're going to chalk it up to some excuse like interest rates or Israel, but no, we had a giant move off the lows, and now we're pulling back as we reach resistance. Okay, when we hit support, we bounce higher. When we get up against these lines, it acts as resistance. So this is perfectly normal. And then I've been getting some comments about how Cornerstone's been underperforming. But if you go look at a chart of Cornerstone really fast, which is also the indexes, which is what you have to put a majority of your money behind, because you can't put your money behind stocks, as I already explained, and you have to put them behind indexes as a result, but you can't put them in 50% maintenance names, because then you can't withdraw out of your account or you can't withstand margin calls. Look at Cornerstone. It's a similar chart here. We had a massive move off the bottom, and now it's up against resistance of this brown line, which is simply the 10-day moving average, which doesn't matter what the moving average is. All that matters is it's up against these moving averages, the 9, the 10-day, and the orange, which is the 20-day. So it looks very similar to the S&P. There's nothing strange or unusual going on with Cornerstone, in my opinion. Everything's just in flux right now as we're up against resistance after the big moves from the lows. So all those comments in the comment section, particularly from Shill, all right, I love your participation and your energy, but sometimes I think it's misplaced. As I just showed you by the charts in Cornerstone, you can see that it's performing in line with all the other indexes. Okay, I would appreciate if you have something bad to say about Cornerstone to bring some facts, because look at this. Cornerstone, if you go look at it on a Morningstar chart, you'll see it's 5 stars, and you'll see that it beats the indexes. So it doesn't look like this on its typical chart over the last 10 years, because you have to refactor back in dividends and drips. Okay, the drip program, I'm not sure if the haters who are in Cornerstone are in this special drip program, but that's the advantage of Cornerstone. 7.8 is the market price. And down here, here's the NAV price, the net asset value of 6. So every month, you get your 21% dividend from Cornerstone drip down at the NAV for $700 gain there. Look, 651, that's another 20% gain. 691, 13, 679, 15% gain, okay? So we do this in both funds, CLM and CRF. That's why I have 500 grand in this fund, because not only do I get the 20% dividend, not only is it 5-star, not only does it drip down at NAV, and it also gives you days gains potential and losses. As you can see, it gives you the losses too. It performs in line with the indexes, and that's all you can ask for. That's why I concentrate so much money behind it, so there's no surprises. The dividend's also set for the year, 20% dividend. Am I making a video about Cornerstone now, or am I going to hear haters about saying stuff like, oh, it was a video about FEPI, and you're talking about Cornerstone again? No, I'm out here living financially free. I'm traveling the world. I'm in Paris right now. How am I able to travel to Paris with this kind of income? It's not just the income I make, it's the available for withdrawal. Okay, that's how I'm able to swipe my E-Trade card and go wherever I want in the world. You can buy cars, clothes, shoes. You can buy plane tickets. You can buy a house with margin money, and I choose margin any day of the week because it's low interest, 6% interest for me. Most of my subscribers and clients have negotiated their margin rates down, or they're trying to. It doesn't show up on a credit check, so the banks don't mind it. They don't call it bad debt. And you can click sell at any time. Plus the dividends pay back my margin. Okay, so it's like a rob Peter to pay Paul strategy, but it's the best idea I've ever had as far as easy layups to make money. Okay, you just have to watch the maintenance, and the maintenance is in my margin e-guide if you need help with that. And with Cornerstone, you just have to learn how to play this fund properly. You have to time it around its rights offering, which I have another e-guide on. I have 4 e-guides: Volume 1, Fundamental Analysis; Volume 2, Technical Analysis; Volume 3, How to Use Margin to Live Financially Free Out of Your Brokerage Accounts; and Volume 4 is How to Play Cornerstone Properly. You can check out my Patreon page, and I have more information on those e-guides there if you ever want to check that out. But also I have a Discord chat room where we alert you of the Cornerstone rights offering. Okay, so we have about 500 members in this chat room who are all highly intelligent and highly experienced in the markets, and they can share their unique brokerage experiences with you, because not every brokerage is the same. Because some brokerages have the maintenance of Yieldmax at or FEPI at 30%, whereas E-Trades is 50%. So I also have my daily portfolio recap section here where you can track my portfolio when I'm not making videos on YouTube. So you get the rights offering announcement at Discord. Okay, sorry, I got a phone call. I was interrupted there, and I have to resume it from where we just left off, which was talking about Discord and how I did not make the e-guides when I started the channel. Okay, I started the channel just to keep myself accountable to the public, all right, and to meet like-minded people who could share similar ideas with me. Okay, then I got all the questions that I had no time and energy left, so I started making the e-guides. And then people who bought the e-guides wanted more rights offering alerts, because they like Cornerstone, but they want the rights offering alert. And so how could I do that? I started the Discord chat room, okay? And then it just blossomed into an all things financial freedom chat room where we have Yieldmax channels, Defiance channels. Now we have a Rex channel. We have a drip channel, like who has the special drip for Cornerstone, because not every brokerage has the special drip program for Cornerstone, and et cetera, okay? And most importantly, you can track my portfolio on Discord when I'm not making videos on YouTube, as I just said. Now, I just want to leave you with the fact that when you're buying FEPI, you just have to keep in mind that it's 50% maintenance, whereas Cornerstone is 30% maintenance, okay? 30% maintenance is why I put all my money in this, and I'm able to live financially free out of my account, okay? You have to pick one fund that's 30% maintenance, okay? Anything that's 30%, because if you put all your money in 50% maintenance names, even if you don't want to trade on margin, you can't withdraw out of your account. Now, if you have, if you're doing this, you have a job and you don't care about having to withdraw out of your account because you just leave it all in your brokerage, okay, fine, okay? But I'm trying to actually, live freely today, okay? Time is money, and I don't like spending it behind a desk at a cubicle. So the other thing you need to be aware of with FEPI is just to combine it with a FANG or something to get the extra upside. Now, I combine it with Cornerstone because Cornerstone averages 30% premiums per year. Okay, go look it up if you don't believe me, but that means you can get a 20% dividend from Cornerstone and 30% premiums and get 50% gains in a given year, okay? As I showed you in the charts, there's nothing wrong with Cornerstone. It's just acting accordingly with the markets, okay, after the big run it had from the lows. So that's how I'm getting both dividends and capital gains and low maintenance, is combining it with Cornerstone, which I have the e-guide on if you ever need help with. Okay, I have the 4 e-guides, which I told you about already. I'm not sure where I told you about in the video because I keep getting interrupted in my videos, so I'm not really sure where I left off, but I think that'll do it, okay? I think you got the gist of it in this video, okay? If you have any questions about Rex, leave comments in the section below or on Discord. And if you need help doing what I'm doing in my brokerage account, email me for my e-guides at akintodd48@gmail.com. And again, volume 1 is fundamental analysis, volume 2 is technical analysis, volume 3 is margin, how to use margin, and volume 4 is how to play Cornerstone properly and get that special drip program. And to play it and to play it properly with the rights offering, which is the most important thing. And again, that's what we started Discord for. When you buy all my e-guides, you get free access to Discord for life and my phone number for life. So please keep that in mind, okay? If you like the video, click like or subscribe, please. And I'll talk to you soon. Thanks.